Hey traders, Parker here with another indicator, actually an updated version of one of my previous indicators. I think it's ATR, DTR indicator, but this is just simply an ATR range indicator. And that's why I named it ATR range with Fibs. So some of the features of the indicator are it has the day high. I actually have the day high and day low lines cut off, but I'll go ahead and cut them on for the purposes of just showing you all the features. But usually when I'm trading, I just cut those off. So there's your day high, your day low. You have your closing price. There's no line for the closing price, but it's showing you the closing price of the day. Throughout the day, this will fluctuate wherever the closing price is. You have your ATR bottom, you have your ATR tops, and that's the range right there. And it's using the yesterday's close as your base, and you have the day is open as well. And here are your inside fibs and fib one and fib two. Those can be manipulated. But for the most part, what the indicator does, if you're familiar with average true range, it takes the average true range and it creates a range for you on that day. You can have your base as your previous day closing price, or you can have your base as your open. And the ATR range would go from the opening price or the closing price. I'll show you on another stock how that can be helpful by switching those up. But for the most part, I'm gonna cut the day high and day low off just because, like I said, when I'm using it, I don't use it. I don't use those. So we take those off. And what we're looking at is the S&P 500. It created this shadow range is just 10% of the range between the ATR top and ATR bottom. And I just use it as a reference point to see how the stock is moving. But it'll be either over the day's open or the close, whichever one you want to use for your base. But as you can see, the stock really respected the ATR range because you can see right here, it hit this top and it hit the bottom. Well, actually bounced from this bottom up here back to the closing price, and it found resistance at the close or the open, whichever one, however you want to look at it. And it finally fell from there. You can see it paused here on the ATR bottom, came down, hit this fib, and finally came to this mid fib of the lower ATR down here. So you also have your days high-low range. High-low range. You have your ATR. So this is the expected ATR average true range for the S&P 500. I have it set for 16 days. The reason why, and this is the difference between it. So you can see it moved $10 when this average true range was 6. So that's the difference. But I have this set at 16 days. My reason for doing that simply because there's 253 days in this stock market. The stock market is open. I just multiply by 25, and that's a fourth of that amount right there, and a fourth of that is 1581. But I just ran it up to use 16. I've gotten a lot of good results using it like that, and you can see going across. You can see even yesterday, it pretty much respected those same range bounds. Let's go back to today. But you can see right here is when the S&P 500 plummeted after FOMC meeting notes or Jay Powell talk, it came right down to this point right here and just stopped. So you're not going to use this necessarily as a support and resistance system. What you're going to use is a possibility that the stock can go here or go there. Same way you want to use the fibs. There's a possibility if it moved this far, it could come down to this fib. Or if a possibility it stops and come back up to this fib. And just give you somewhat of a range or a predicted range where the stock could possibly go. So those are some of the features of the indicator. And like I said before, I would show you the other feature of the indicator is this. If I stretch it, you can see that there's a 1 times ATR and 1 times ATR down here. There's actually, it goes up to 3 times ATR, and then you get another fibs to go, fib bases, another set of fibs or another range that is created from here. And you can look right here, this range to this range is just your ATR. So ATR bottom, then 1 times ATR is the lower one. It gives you another range to look at. But these ranges, those extra ranges like 1x and 1x down here, they're only activated if the day's high crosses above really whatever time period. So I can't really say day because you can actually change the time period. So whatever time period, high or low, if it crosses below or outside the bounds of the ATR top or bottom, it'll activate these fields. So that way your chart is not clustered up with a whole bunch of lines. They're only activated if the stock actually crosses below, if the low crosses below this ATR bottom, or if the high crosses above this ATR top. And you can see right here, you didn't get that. Well, you actually did. It crossed above the ATR top, but you didn't get it across below the low. So you don't have those extra fields clogging up the chart down there. And it really works for your benefit because it's using less resources when those extra lines are not. I mean, it's using less resources when those lines are not on the screen because the indicated ThinkorSwim is constantly tracking those lines, so it just results in you using extra data when you shouldn't have to. So that's one of the reasons why I made those updates of those features in there. But you're gonna come in times when this is not gonna be really effective for you. So if we go to GME, you can see using yesterday's closing price is not effective for you. You know, so this is not going to help you out at all. But those are those extra ATR levels I was telling you about, up to 3. When GME's 16-day ATR is only 96 cents. So what we're going to do is come over here. We're going to change to days open. And we changed to the days open, but look what happened. Those fibs, all those extra lines aren't doing you any good. They're not necessarily helping you. If you want to use it like this, I wouldn't. I would just go ahead and go in here and cut the fibs off. So hide outside fibs. So those fibs are off. The inside fibs are still on. And look what happened. You're actually able to look at the ATR ranges. So this is 1 times ATR down here. And you can see how the stock actually, you know, the last this 5-minute bar actually paused here. When you got this next extreme, this is really just people taking profits from the run up from yesterday. But you can see right here, it fell all the way down to 3 times ATR, bounced up, found resistance here, 2 times ATR, ran back up. I almost came back up to this line right here, but couldn't. Came back down, crossed back below 1 times ATR, came back to 2 times ATR. So at times you're going to have to use the indicator like this. One of the things about my indicators, if you haven't noticed, if you've been following my channel for a while, I try and make all of my things fully customizable and versatile. So this is one of the indicators that offer you some sense of versatility, especially when you can't use your previous day close or stock has moved so forward that it's not going to be helpful. I wanted to show you another one. Another aspect of this indicator is this. Right now we're using the range between the ATR. The range type is ATR. If I couldn't do what I'm doing now, or I felt as though the ATR ranges were too close together, what I would do is this. I would change this to the day's high-low range. So that way, the actual fib, this gray line and this gray line right here, these fibs right here will actually be using the day high and day low is my range versus the ATR range. And you would just cut these ATR lines off from there. So I'm going to go ahead and go and hide those ATR. So where's the ATR lines? Hide ATR lines. So yes. So it gets rid of the bubbles and everything. So now you're dealing with the high-low range. And I'll go ahead and put the day high and day low back on. Here's your day low, day high, and here's your range. Your top fib, I think that's 78.6 and 21.4 fib. But you can change those, and this is your midline right here for the range between high and low. So if, like I said, you're going to come up to certain points where the ATR is not going to be very effective for you. So you'll just change it up to the high-low range. You can see right here, you get yesterday's high-low close, and you get the days as well. And here are the other features. You can show chart bubbles. Now to get rid of all the bubbles on the chart. Show yesterday bubbles. That's yesterday's price, like those right here. And those gonna always be in the back, while the day stuff is always gonna be in the front. Fib bubbles, hide outside fields, hide ATR lines, higher time frame. Right now we're using it on a daily basis, and I'm using the base of the days open. Really, you're not. Yes, yes, I am. But without the ATR, this really doesn't matter. My length is 16. Average type on my ATR is simple. Show labels. Those are those labels right there. The fib 78.6 and 214. You can change all of those. That little cloud that I got there, you can change that. I'll change that. Don't worry about the bears bullets, but it'll be changed. But that just represents the little ATR cloud that's there. So, like I said, if the ATR isn't working for you, then just use the day's high-low range, and you just set it up like this right here, and we can go back to the S&P 500, and we'll get the same thing. You just won't get any outside fibs or any fibs that's showing on the outside. You just get this general inside fibs, and you can look right here. Let me switch. Well, that's the little cloud right there. But you can look right here. Here's your where it actually got stretched. So this, you can't say that it hit these marks because the S&P 500 just collapsed. But if you're using the high-low range, these fields will adjust according to the high-low range of 10, whatever the high-low range is, or the days. Day high-low. So range day high-low. Whatever the higher time, I really need to say period high-low. So I just changed that to period high-low, and the global is just the ATR cloud. So that's pretty much the indicator, and it works on all time frames. Let's go to 3-year day. And right now, because it's on a daily time frame, it's really not giving you any real information. So what I'm going to do is I'm going to push it up to a weekly time frame, and I'm going to move it to 13. And I'll explain to you in a moment. I'm going to use my base of the previous. I'm going to change that to previous closing price. Chart bubbles yesterday, fib, hot outside fibs, no, and hot ATR lines, no. And we're going to use the ATR, and there we go. And here we are looking at this on a weekly basis. The reason why I chose 13 is the same reason why I chose 16. Basically 253 days in the open days of the stock market divided by 5, because I only open 5 days a week, possibly 5 days a week, times 0.25. You get 1265. I just round up to 13. And you can see how it actually helped out and hit certain markers on here. So right now, this was last week's closing price, and this is my base for my ATR and Fibs. So you can see where price came up to the last week's high, or last week's high, It paused, it got above it, came all the way up here to this, went above the ATR top, came to this fib level right here, and paused. It couldn't get, it actually did get above, but it really didn't go anywhere past there. But I'm just showing you this because it works on all time frames, giving you a possibility where a stock may go to, may not go to on a weekly basis. And you can actually change this to a monthly basis as well. So with me, on a monthly basis, I use 3 months, or you can use 4 months, whatever you want to use. But here we are on on a monthly basis. You can see how the S&P 500 actually came down here to this ATR bottom right here, and it went slightly below, and that's why you generated those extra fields down there. And it came back above, and this is your monthly closing price, or last month's closing price right here, and this month's opening price right here. And usually I have this open off as well when I'm looking at it on higher time frames. But you can see how the fields played a role right here, and you see how the fields played a role right here as well. And this is on a 3-month ATR move average, and it looks a lot more cleaner, a lot less cluttered on this time frame compared to the weekly. Here's our monthly high right here, and you can see how the stock really respected the field right there and came back, respected a little box right here, and it actually crashed down below on ultra high volume, or you could say volume above 2 deviations. That's what those yellow bar means. And one of the things I always like to do is go look at the pandemic and see how this thing played out. I really don't know how it played out, but you can see this was the average true range during the pandemic, or right after the pandemic actually hit. But you can see once the stock S&P 500 started making a recovery, and you can see all these different fib levels right here. And you can see right here, that's what that month's closing price. And you can see this was the open for this month's closing, this month's right here. You can see how everything really played out in respect to those ATR and the ATR high and low, and the fib levels. And we can just go through it a little bit, and you can see how things really played out, especially with using the ATR or using the fibs for predicting where stock may or may not go based off its average true range. And that's basically what this indicator does. It bases everything off its average true range, and it builds ranges for stock to possibly go to with fibs that are in there as well. And I'm just scanning through the S&P 500 and seeing how everything is played out. And we really wanted to see it a little bit more cleaner. Just go in there and take off the day open, day low, and we'll just use all the previous data. And that'll give us our hard lines. I don't think it took out the day low. Nope. Give us these hard lines like this, and we're really paying more attention to the previous month's data versus the current month's data. Especially here, right here, previous month's low and previous month's close, it all created like this area of support for the S&P 500 to rise up. From there, hit this ATR. I don't know if that's top or bottom. It has to be top. Came back down, pushed back above it, and respected the fib level, so we're within there. And we're just scanning through and seeing how everything played out. I really like this right here. That's how for the S&P 500 came, bounced back above, played around those fields, and then pushed up. But this isn't any type of financial advice. It's just an indicator that I decided to develop, especially looking for stocks that movements in stocks based off the average true range levels. And that's pretty much the end of the video. And you can go in here as well and change that stuff to the current period. So you can change these to the current period. I went ahead and changed those things to the previous period close. So everything should be fixed now. I guess I need to change those. Well, that's a day open, day low, and day high. So okay, that should be everything. So I apologize for doing this on screen, changing everything like that. But everything is according to the period now, so it should be less confusion about certain things. But for the most part, that's the indicator. Those are the features of the indicator, and all I want to do is just put things back the way they were. So this was on the day 16, and I'm using previous day close. Previous period close as my base. And here we are with the S&P 500. You can see everything that happened on this day. It basically range traded, waiting for the FOMC, and this was the build up, and you can say this was the climax down. And it pretty much found some nice significant area price prediction areas according to the ATR. But that's the indicator, and if you're interested in the indicator, just look in the link in the description, and you can get it from there. If you haven't already, please like and subscribe. If you have any comments or suggestions, leave them in the comment section or shoot them through my email. I appreciate you guys taking the time out to listen to what I had to say. And I'll probably do another video on the actual strategy or the risk reward and using this indicator. And you can see right here, I'm just really proud of how this indicator came out, and especially with the results. And you can see with the S&P 500, it really shows true. So you can see with this low right here that this ATR indicator actually works out really nicely. So like I said, this is the end of the video. I really appreciate you guys taking the time out to listen to what I had to say. I wish you the best out there, and stay safe, and God bless.